Hey everyone, welcome back to SecureDApp's YouTube channel. And this is your host and host Kunal as always. So we are back with SecureDApp Spotlight episode 6. So what is SecureDApp Spotlight? SecureDApp Spotlight is a series where we sit down with industry expert with blockchain regulation and cybersecurity regulations and whatever that comes in between. Real talks, real insights straight from the front lines of Web3 and digital security. So let me introduce myself. I'm Kunal Chowdhury, content and community executive and a subject matter expert at SecureDApp. So with me, I have joined by Mr. Nikhil Prasad. Mr. Nikhil Prasad is one of the most promising legal minds shaping the future of blockchain regulations. At SecureDApp, Nikhil serves as blockchain regulation and a subject matter expert, playing a critical role in aligning decentralized technologies with evolving legal frameworks. So, without any delay, let me just hand over this mic to Mr. Nikhil, and he will just introduce himself and tell us what we are heading to. So, over to you, my friend.
Hello, everybody. I'm Nikhil Prasad Singh. I'm a lawyer and a subject matter expert uh, at SecureDApp, and further, I'm a passionate on crypto and its regulations. And uh, we will be covering United Kingdom's regulations today on the virtual digital assets. So that is what we are going to cover today. And let's start, Kunal.
Okay, Nikhil. Thank you, my friend. Thank you for the intro. So first question that comes to my mind hearing about United Kingdom. So what is the big picture of on UK VDA regulations right now?
Mhm. So it's a very great starter question, Kunal. So first of all, the UK doesn't treat virtual digital assets. Okay, so think a Bitcoin, Ethereum, and other tokens as traditional financial. They think these other tokens as traditional financial instruments under the Financial Services and Markets Act. And instead of VDAs, these are regulated primarily through two lenses. Okay, first of all, it is Anti-Money Laundering and Counter-Terrorist Financing Act, and second is the financial promotions. So first of all, since 10th January 2020, any firm offering crypto exchange or custody services to UK customers must register with the FCA or AML/CTF supervision. That means putting in place a robust customer due diligence, KYC mechanisms, transaction monitoring, and suspicious activity reporting systems as well. Further, as of 2023, the FCA has extended its financial promotion rules to qualifying crypto assets. And in practice, that means any marketing or advertisement aimed at UK retail customers must either be issued by an FCA authorized firm or approved by one. Okay, so you will see a prominent risk warnings that no refer a friend, don't refer a friend bonuses, and a mandatory 24-hour cooling off period for the first time buyer. So while firms are yet holding all these licenses, they must still follow clear rules when taking on customers or running ads. It's a hybrid approach, enough oversight to manage financial crime and consumer risk without stealing innovations. So it's equal to India only. India's VDA regulations also come under all these AML and CFT guidelines. So it's equitable to India right.
Okay, Nikhil. Okay, got your point. So next question that comes to my mind is how do crypto firms register and meet AML and CTF requirements in UK particularly?
Hmm. So that is where the real legwork happens. Okay. So any exchange or custodian that wants to serve a UK client submits an application to FCA. Here, what happens typically is that there are governance and personals. The FCA checks that directors and senior managers are fit and proper, no past fraud or serious compliances failings. Okay, and further risk assessment frameworks also there are. You must outline how you identify, access, and mitigate money laundering risks. That includes showing your policies for enhanced due diligence on high risk customers. There is transaction monitoring. Real-time system must flag suspicion patterns, large sudden transfer, repeated small deposit or transaction with sanctioned jurisdictions. Further, you need a clear process for escalating and submitting suspicious activity reports to the National Crime Agency as well. Further, the FCA wants confidence your platform won't get hacked or manipulated. To show your cybersecurity suspicious certification, penetration test reports, incident response plan. So you need IT and security. You need transaction monitoring. You need reporting processes further. So if you applied in the temporary registration regime, you had a habit of breathing room, but new firms must clear the bar upfront to make that smoother. Many startup plugs into turnkey solutions, and further at SecureDApp, for example, our compliance module automates KYC checks as well, risk scoring, SAR generation. That way, you spend less time on build versus buy debates and more on product redevelopment.
Got your point, bro. So, after hearing your answer, the next question that comes to my mind is, what must firms do when marketing VDA to UK consumers?
Okay, so. mm, So after October 2023, crypto ads got pulled into the same clear and fair dealing framework that banks and insurers have long used. Okay, here is what marketing team needs right now. It needs to know that there are risk warnings. You cannot entice. Every ad must carry a standard warning like your capital is at risk in a font size that at least 50% of the main text. Okay, that is in the same way that LIC is sold in India. There is no incentive scheme. You can't entice new customers with sign-up bonuses, deposit matches, or referral rewards. The FCA sees them as nudge that could push people into products they don't fully understand. Further, there has to be a cooling off period. Okay, so the first time investors have 24 hours to cancel a purchase, getting a full refund if they change their mind. Further, promotions must clear, fair, and not misleading. That means no over-promising on returns, no minimizing of risk, and no use of complex jargon without plain English explanations. So, if a promotion slips through unapproved, and FCA can issue a stop notice and demand takedown within 48 hours. Okay, so you might then face a line or be forced to appoint a skilled person review. The net result of marketing and compliance team must work in hand in gloves, reviewing every tweet, banner ad, and email campaign. So that is how what firms should do when they are trying to market.
Okay. So, what's on the horizon? How will the future rules change the things in UK?
Hmm. So Kunal, when we as of now in the it's very good that just last month, May 25, the FCA has rolled out a discussion paper that is DP25/1, marking a clear shift from AML only rules to full blown regulated regime covering. So they are trying to equate themselves with MICA. So just because UK has not been is not a after the Brexit, UK has been not a member of European Union, so they have to make their own regulations. They have to make their own free trade agreements. So as of now, just after the MICA has come, UK has also drawn their own regulations. They're trying to vision their own regulations. So just last month on May 25, they have rolled their discussion paper. In that discussion paper, you can fairly read that uh, they're trying to make trading platforms intermediaries into these guidelines. They are trying to think order book transparency, best execution standards, and segregation of client assets. Further, rules on margin, collateral, and borrower protection, avoiding the kind of hidden leverage that has caused flash crashes elsewhere. Further, decentralized finance as well. They're exploring whether key DeFi protocol should fall under some of the same governance and disclosure requirements centralized exchanges. Uh, Further, if we talk about exemptions, stablecoin, and tokenized assets, potential exemption for qualifying stable coins, but only if issuer meet transparency and reserve requirements. So they have to uh, make their reserves. They have to comply with all the reserve regulations. Further, if the consultation has closed on 13th June, and finalized rules are expected in waves throughout the 2026. So consultation has been closed, and let's see what comes from it now. Firms need to start mapping on how these requirements will affect their tech stacks. Okay, tech stacks. So governance structures and capital plans. You can't pretend this is someone else's problem. It's coming whether you like it or not.
Okay, so Nikhil, you just mentioned stable coins are exemptions. So how are stable coins treated differently in UK?
Hmm. So So you have to understand that stable coins stand apart because they promise price stability by pegging to fiat or baskets of assets. So in DP25 consultation paper, the FCA has asked whether certain retail restrictions could be eased or truly qualifying stablecoins. Those issued by regulated entitles with regular audit and robust redemption mechanism. So the idea is to let customers use stablecoin for payments only or lending without facing the same levies and restrictions as more volatile tokens. So the flash loans, all these things will be more uh, in the use when the stablecoins become more in the in more comes into this regulation. And further, the said users still need to publish regular transparency reports on their reserves. The holder reserves in high quality liquid assets offer straightforward on-chain redemption processes, so users can convert back to fiat quickly. The industry hopes the final rules will give clear guardrails that protect consumers while encouraging real world use cases like cross-border remittances and programmable commerce without the drama of this wild price swings. Okay, so
Okay, understood, Nikhil. I completely understood what you said. So, what support is there for innovation when we call about startup innovation in UK?
there is so much support for these innovations. If we talk about, we really want to talk about it. The FCA's regulator sandbox is a real standout right now. Since its launch in 2016, it has laid dozens of crypto and blockchain projects test with real customer underlying requirements. You submit an application, outline your use case and safeguards, and if accepted, you get base scopes, guidance, and speedier feedback loops. So, meanwhile, the Treasury is working on, I think, on new secondary regulations about to extend the FCA's remit explicitly over crypto. So there is a statutory backing for these tests, and the net effect is a more predictable path from prototype to full launch. Okay, so for teams that want to hit ground running, SecureDApp provides a sandbox-ready toolkit as well, I think. Okay, everything from smart contract templates to audit checklists. So you can show your regulators your sandbox tested and audit verified before you go live.
Okay, so Nikhil, you mentioned FCA. So, why do firms have so much of problem getting FCA approval in UK?
So see, approval rates have been tight. Only about 14% of email registrations sail through first time. The common stumbles that they faces are, first of all, there is incomplete conflict of interest policies, unclear escalation lines, or under-resourced compliance function. Further, the risk assessment shortfalls has been very wide as well, missing or generic customer risk profiles. Regulator want to see detailed scenario-based tests. Further, data and documentation, poor record keeping on beneficial ownership or lack of audit trails of system changes. Further, there are various security deficiencies as well. There is ISO 27001 certification these outdated encryption standards or untested incident response plans. So early extension reviews, whether from consulting firms or turnkey providers, can help spot these gaps. Going it alone, doing it alone means dozen of back and forth with the FCAs, so which delays your market entry and drives up your cost as well.
Okay. So how does UK is comparing their approach with international market when we talk about MICA, Euro, and United States? So how is UK comparing with them?
So that is what just now we discussed as well, that UK is trying to uh, just make their own run. So the UK's tech neutral principle based approach sits between two extremes right now. That is European MICA and United States. MICA has been very prescriptive on stablecoin liquidity, issuer capital requirements, and transparencies on all. While United States, a patchwork state licenses like New York bit license plus federal enforcement by the SEC and CFTCs. So by focusing on first on AML and marketing rules, then layering on trading platform, custody, and market integrity. So integrity standard, the UK aims for a middle way. Okay, so you get enough clarity to build global products, but still retain flexibility for emerging models like DeFi. So over time, as the FCA implements DB25 feedback and the Treasury enacts crypto-specific legislations, so the UK regime will look more hard-edged and comparable to the traditional finance, while still welcoming innovation.
So Nikhil, my next question to you is how does the UK classify different types of tokens?
It's a great question, Kunal. So, what is the classification of tokens? So,
Exactly.
first of all, the UK doesn't lump all tokens into one single category. Okay, so instead the FCA break them into three different types. So, first of all, there is exchange tokens. So, like Ethereum and Bitcoin, these are not backed by any asset, and while they can be used as a means of exchange, but they are not considered they are not considered as a legal tender. Further, there are utility tokens. So these provides access to product or services like an API key or gaming tokens. So they are not financial instruments, but that may still fall under consumer protection laws. So further, there are security tokens as well. So these are backed by real world assets, RWAs, or if they give rights like dividends or profit share. If a token meets the definition of a specified investment under the Financial Services Act 2000, so it falls squarely into FCA's regulatory parameter. So that is the boundary can be blurred easily in DeFi, but these classifications helps decide whether a firm needs a specific authorization or just a ML registration.
Got your point, Nikhil. So how is UK treating NFTs that we call non-fungible
And
tokens? Are they regulated?
so no, NFTs are currently not directly regulated in UK unless they fall into another regulatory security tokens or another regulatory category. So that said, the consumer protection side is where regulators are keeping a close watch. So a lot of NFT drops make promises about value appreciation, future perks, resale profits that can mislead buyers. So while minting or trading NFTs won't usually trigger FCA oversight, your marketing might still under financial promotion rules or be examined under misleading advertising laws. So enforced by advertising standards, ASA. So the FCA and Treasury are watching this space, but for now the message is if it looks like a speculative investment, so expect regulators to step in, and even if the tech is novel. So there will be always a gray area in this up until and unless the mm, regulation comes with a clear insight over this.
Okay, Nikhil, got your point. So what is UK doing about decentralized finance that we call DeFi regulations?
Mm. So this is a real frontier, right? As of now, the UK is trying to strike a balance, recognizing that DeFi doesn't fit really into existing rules, but it's too big to ignore. In the discussion paper as well, the FCA floated the idea of responsible persons, basically identifying or entities who might bear legal duties. That's controversial in DeFi, where decentralization is the whole point. So still the FCA is asking if a protocol facilitates lending or derivatives, shouldn't someone be accountable or AML user disclosures and reporting obligations? So they are not banning DeFi, but they are looking to pull accountability closer to the surface. So maybe through voluntary codes of conduct or thresholds that once crossed trigger obligation. So if you are building a DeFi, watch this space closely and get legal advice. That is what I will suggest as of now.
Okay, so as of now, you gave a real info about DeFi. So my question stands out right now is what are the tax obligations on crypto in UK?
Okay, so yes, and it's a more detailed than people think. So HMRC treats crypto primarily as an asset and not a currency. So that is how taxation typically works. For individuals, it will come under capital gains tax. Okay, so it will apply on sale, gift, or exchange of any crypto, or including other tokens. The annual CGT allowance is now £3,000 as of April 2094. So gain above that are taxable, and mining and staking income may also be taxed as income. So further, for businesses, if you are trading crypto commercially or it's part of your business model, exchange, wallet, mining, corporation taxes apply on your profits. Further, for airdrops and reward, this might be income taxable at the time of receipt if received in exchange for services. HMRC has issued detailed crypto tax guidance, and while it's evolving, ignorance won't be an excuse. Good tax hygiene is a must. Track your wallets and exchanges. Tools like Coinly, CoinTracker are super helpful. That what I will suggest right now.
Okay, okay, got your point. So, Nikhil, can UK bank refuse to work with crypto businesses?
So can yeah. Unfortunately, this has been a sticking point. Many UK banks have historically been reluctant to offer accounts to crypto firms, especially startups, because of their perceived AML risks. However, there has been some softening lately. In early 2024, the economic secretary to the Treasury said that the government is working with banks to create a proportionate risk management practices. So they'll meaning don't just say no to crypto, access the actual risk. So you will have to do a proper risk assessment. Then after you will be rejected. Still, many founders end up going to neobanks or foreign accounts just to operate. That's where the platform like SecureDApp can be a lifesaver, I think, because we help to bridge this trust gap with the plug and play compliance tools that banks recognize as reducing risks exposure.
Okay, okay. So are crypto derivatives regulated in UK?
Crypto derivatives. So I think yes, very much these crypto derivatives are regulated. Uh, since January 2021, the FCA has banned the sale of the crypto derivative and exchange traded notes (ETNs) to retail customers. They argue the volatility, lack of valuation reliability, and market manipulation risks make these too dangerous for the average persons. For the institutional clients, crypto derivatives are still permitted, but only through the authorized investment firms. So if your platform offers perpetual or leverage token to the UK users, you are walking a legal tightrope here. So even platforms geo-blocking UK IPs need to ensure indirect targeting of UK customers. Regulators are watching Discord channels and Reddit promotions and influencer campaigns. So you'll have to be very that you don't uh, breach some of the UK regulations.
Nice point, Nikhil. So, how is UK handling cross-border crypto businesses?
Hmm. So if you're outside the UK but targeting users through ads, English languages, websites, or accepting GBP payments, you may still fall under UK jurisdiction. The FCA uses look-through approach. Okay, so if the UK consumers are at risk, they will assert oversight even if the firm is based in Dubai, the BVI, or Singapore. So this is especially important for the influencer and affiliates. Promoting an unregistered crypto exchange to UK users, even from abroad, can get you trouble into the financial promotion regimes. Okay, so don't try to do that, man. Okay.
Okay. So Nikhil, my next question to you is, can DAOs legally operate in UK? Uh,
So right now, Kunal, DAOs that are decentralized autonomous organizations are in a gray zone. So legally, they have no separate personality unless they are wrapped in a corporate structure like a UK LLP, Cayman Foundation, or Swiss Association. So without legal status, thou can't sign contracts or hold property. Founders may face personal liability if things go wrong. Regulators may look for controlling mind, which could be developers or signers. Some legal innovators are working on DAO wrappers like LessDAO or UK-based LLP models. So, but if you are planning to raise money, offer tokens, or uh, run treasury functions through a DAO, the structure it right. Okay, regulations won't buy code is law as a defense. So that is what it is in a gray zone.
okay, I understood. I completely understood what you said. So Nikhil, talking about crypto, how does UK protect consumer funds on crypto platforms?
So consumer protection is growing priority. Okay, while crypto holdings aren't covered by the FSCS, the FCA is pushing for stronger safeguarding and segregation of the client assets in the DP20 fund as well, DP25 papers as well. They are asking whether exchanges and custodians should hold as asset in trust. So similar to payment institution and must ring fence customer funds. So they are also exporting custody rules that mirror traditional securities regulations. So requiring firms to issue account statements, maintain cold wallets, and publish annual audits. So a platform if you are a platform provider, these are the operational safeguards you should be designing now, not waiting until it's law.
Okay. So Nikhil, I have one more question regarding crypto. So what is UK's long-term vision on crypto?
So honestly, Kunal, I think UK sees a crypto as an opportunity, not a threat. The government has said it wants to make the UK a global hub for crypto asset innovation, but in a way that protect user and ensures market integrity. So we have seen that in Sandbox program, the thoughtful rule making like PS223 and in forward-looking consultations like DP25. The direction is clear. If you build responsibly, disclose honestly, and protect your users, you are welcome here. So that's also where platforms like you or SecureDApp Science as well. We are not just helping startup tech, man. We are like uh, embedded trust into their architecture from day one. Okay, and that is the real differentiator going forward.
Got your point. So Nikhil, is UK exploring CBDC, that we call central bank digital currencies?
Yes, the UK is actively exploring digital pound, often called Bitcoin is the media. in the media. The Bank of England, the HM Treasury are in design and consultation phase, and a final decision is expected by 25 or 26. The idea is to create a state-backed digital currency that can coexist with the cash, offering the speed and programmability of crypto, but with the trust and stability of central bank backing. They are being very cautious, though, ensuring privacy safeguards, avoiding disintermediation of banks, and assessing systematic risks. Importantly, they have stated that digital bond won't be anonymous, but will have a strong data protection protocols. So this is not a VDA in sense of Bitcoin or Ether, but it signals how the UK is embracing tokenized money just on its own terms.
Okay. So Nikhil, my final question, I have a final question on stable coins. So how does UK is regulating stable coins?
So stable coins are not top priority. The UK is planning to regulate fiat-backed stable coins as a form of payment. So under the Financial Services and Market Act, the issuers and the wallet providers will be authorized and supervised by the FCA. Firms will need to meet capital redemptions and safeguarding standards. There will be a Bank of England oversight if a stablecoin becomes systematically important, like a big tech stablecoin used by millions of Brits. So the Treasury has already said that the goal is to enable innovation while managing the risk to financial stability. The algorithmic stablecoin, however, will be not be treated the same. They are considered higher risk and may not be permitted as payment instruments, man.
Okay, Nikhil. Thank you, Nikhil. This was really informative and a
Thank you,
really
man.
insightful session for all the viewers and audience. My last and final point is any final thoughts or advice for our audience regarding UK VDA regulations?
Um, My best advice is to treat compliance as a strategic asset, not a checkbox. So build it in your own product roadmap, invest in robust governance, and keep your ear to the ground on consultation and sandbox learnings. So that is the way you will stay ahead of the requirements, earn customer trust, and focus on innovation rather than firefighting the last minute rule changes. And just that.
Okay, Nikhil, thank you. So before ending this session, so guys, let me tell you something about SecureDApp. SecureDApp is a cybersecurity and blockchain security firm. It works as your frontline defense. It is India's one of the top most security firm. We are working day and night to just secure your blockchain and cybersecurity assets. So we have products like Secure Watch, Solidity Shield, Audit Express, which is a no-code product, which just gets installed in your computer or phone and just do their job. They detect 150 types of vulnerabilities. Secure Watch is a product which sees your what you say attacks 24. It monitors 24 hours. So for to know more, you just need to go to securedapp.io and check out our products. So finally, thank you for watching, guys. Subscribe to our YouTube channel. If you like this video, please hit the like button. Share this video with your friends, families, and colleagues. Uh, and we will be back with SecureDApp Spotlight episode 7 with Nikhil Prasad only. So till then, thank you. Stay safe, stay secure, and as always, I say, stay ahead. Thank you, Nikhil, my friend.
Thanks, man.